Now, we will now continue the panel discussion session. Let me introduce today's panelists. Ms. Melissa Knoll, Section Chief of Decision Making and Behavioral Studies at the Consumer Financial Protection Bureau, United States. Ms. Paola Soccorso, Senior Economist at the Italian Companies and Exchange Commission, Italy. Mr. Robert Elsen, Deputy Head of the International Federation of Robotics from the Federal Financial Supervisory Authority, Germany. Mr. Andy Schmulow, Professor at the University of Wollongong, Australia. Mr. Yeonggeun Kim, Deputy Director at the Financial Services Commission, Korea. Ms. Woon Jung, Chairperson at Finance&Happiness Network and Ombudsman at the Financial Services Commission, Korea. Ms. Yeonggeun, Attorney and Director at Consumers Korea. Now, I would like to invite Professor Man Cho, who will serve as the moderator for this session. The floor is yours, Professor Cho.
Okay, thank you. And as it is an online seminar, we will just go ahead and start the panel discussion session without the break. But if you need some intermission, please feel free to do so. Now, in the participants to this seminar, we have our founding chairperson of our association, the IAFICO, International Academy of Financial Consumers, Professor Hongju Jung. So I like to ask if he can sort of deliver a short remark to everyone. We have some, the good friends in the participants. So why don't I hear from Professor Jung before we start the panel discussion?
Okay, good morning, good afternoon, good evening, everybody. Probably Professor Cho checked my attendance, wants to check my attendance. So I was asked to make a little speech before you begin with your panel discussion. I think the IAFICO, International Academy of Financial Consumer, is a really good platform to discuss the issues and problems related to the financial consumer, not only just in Korea, but also with foreign countries, such as European countries, the United States, and so forth. Today's conference is a very good opportunity to try to resolve the Korean problem, comparing with the other countries' problem and the solution. So I hope you enjoy this conference, and also I hope to we can continue this kind of opportunities in the near future. Okay. Thank you very much for having me make a little speech before your panel discussion. Okay. Good luck, everybody.
Okay, thank you, Hongju. And we also have editor of our journal, Professor Sharon Tennyson at Cornell University. I understand it is a very late at night there, but I appreciate your participation. Thank you and appreciate. Thank you for your participation. And let's begin the panel discussion session. Just to emphasize a couple of points from the two presentations we heard. First, Professor Cole, Dongwon Cole, gave a good summary of the Financial Consumer Act, the new law in Korea. In my view, a couple of issues he wants to compare with the practices in Korea with those in other country, include what to do for the loan product. You know, whether we should apply the same, you know, the levels of requirement in terms of duty to explain and application of the appropriateness and suitability principle. Also, what's the extent of responsibility of CEO and other executives in financial institutions in terms of mis-selling of financial product. From Professor Choi, what I could jot down as a key takeaway was the sort of more details in segmenting financial consumers. For example, ordinary financial consumers can encompass a broad group of people. So there may be some more knowledge-based as well as risk-based segmentation of financial consumers. In fact, we have some related discussions from other countries to those issues raised by the two experts and good colleagues, EFICO colleagues, in the presentation session. Now, in the panel discussion, we will have four you know, the non-Korean countries first, starting from the US, Germany, the BaFin, Germany. In the US, we have Dr. Knoll, Dr. Melissa Knoll, who is a well-known researcher on the behavioral economics. And she is from the CFPB, Consumer Financial Protection Bureau. And then we will have the Mr. Elsen, Robert Elsen from BaFin in Germany. And following that, we will have Miss Paola Soccorso from CONSOB in Italy. CONSOB has a similar function, as I hear, to the SEC in the US, Security Exchange Commission. And then we will hear from our good colleague, Andy, Professor Andy Schmulow from Australia, but he will discuss, he will compare several aspects of financial consumers between UK and South Africa. So although he is from Australia, we will hear some, you know, the issues from those two countries. After that, we have Mr. Yeonggeun Kim from the Financial Services Commission in Korea. So he is representing the policy and regulatory authority, the highest level of policy making in the financial market. So we will hear from Mr. Kim. And after that, we have two additional EFICO colleagues who are expert on this issue. Mr. Woon Chung, she is running the Finance and Happiness Network. She also serves as an ombudsman in the Korean government. So we will hear from her. And then last but not least, Dr. Yeonggeun will discuss about some international coordination issue as to coming up with the best practices for the specific financial consumer measures that we are focusing today. So with that order, why don't we start from Dr. Knoll from the US.
Hi, everyone. My name is Melissa Knoll, and I'm the Section Chief of the Decision Making and Behavioral Studies section at the Consumer Financial Protection Bureau. I work in the Office of Research, and today I'm going to be talking to you about disclosure research at the CFPB. Before I begin, I have to provide a disclaimer that this presentation is being made by a Consumer Financial Protection Bureau representative on behalf of the Bureau. It does not constitute legal interpretation, guidance, or advice of the Consumer Financial Protection Bureau. Any opinions or views stated by the presenter are the presenter's own and may not represent the Bureau's views. So thank you everyone for having me today. Depending on your time zone, good morning, good afternoon, or good evening. I really appreciate the opportunity to have this session pre-recorded so that I could share this information with you, not at 11 p.m. East Coast in the US time. So thank you so much for being flexible. So this evening, for me, I'm going to be talking to you about disclosure at the CFPB. So first, I'll give you a little bit of a background of how the Consumer Financial Protection Bureau came to focus on disclosure, and then I'll talk about our disclosure testing capacity at the Bureau. So first, as you may know, mandatory disclosures can be an efficient consumer protection policy tool when markets do not provide consumers with information necessary to make informed choices, or when they don't provide that information in a usable and useful way, so that consumers can use that information when making their decisions. The Dodd-Frank Consumer Financial Protection Act of 2010, which we'll call the Dodd-Frank Act going forward, first, it actually created the Consumer Financial Protection Bureau, but as part of the Consumer Financial Protection Bureau's mandate, it also provided the CFPB with regulatory authority over a number of consumer financial protection laws, many of which include disclosure requirements. And so part of the Dodd-Frank Act also directs the CFPB to ensure that consumers are provided with timely and understandable information to make responsible decisions about financial transactions. And in order to accomplish this goal, we are authorized to prescribe rules to ensure that features of any consumer financial product or service are fully accurately and effectively disclosed to consumers in a manner that permits them to understand the costs, benefits, and risks associated with the product or service in light of the facts and circumstances of the particular rule or disclosure. And so I wanted to highlight some of the particular aspects of the financial consumer protection policy that the International Academy of Financial Consumers is particularly interested in. Some of those include the principles of affordability or appropriateness, internal control measures, and finally, duty to explain. And this final point, duty to explain, is very consistent with the CFPB's task that I already mentioned of ensuring that consumers are provided with timely and understandable information to make responsible decisions about financial transactions. And so it's this duty to explain that I'm going to focus on today. So the duty to explain, as I interpret it, and of course there'll be some discussion about this in your conference this evening, has to do with whether consumers understand the information that they're being provided as part of these disclosures. And so part of what we work on at the Bureau is trying to ensure that consumers understand this information. The Dodd-Frank Act actually requires the CFPB to conduct consumer testing when issuing model forms pursuant to a certain section of the Dodd-Frank Act, specifically 1032B. And what a model form does for financial institutions, it provides a safe harbor for them if they use the form that we provide as part of a regulation. And so in order to come up with this model form, and there are also other aspects of a disclosure where we aren't necessarily creating a model form, but potentially model language or suggested language or things like that. But if the financial institutions do use a model form that we come up with, in many cases, there is a safe harbor for them. And so consumer testing, which we are required to do when creating a model form and issuing it as part of a rule, enables the Bureau to directly study how consumers interact with and understand this disclosure before it's actually promulgated through a proposed rule. And so there are various stages to developing and testing a disclosure. In order to develop a disclosure, some of our best practices have led us to identify the set of information to include, also thinking hard about how to convey that information, as well as how to design the disclosure. The team that I lead at the Bureau is an interdisciplinary team of psychologists and decision scientists and experimental economists. And so we're really experts in how people process and understand information. And so we use our backgrounds and expertise to help convey the information and design the disclosure in a way that we think is most understandable for consumers. But even before developing the disclosure, we tend to conduct some exploratory research to learn about the challenges that consumers face in a financial marketplace. So hearing directly from consumers what they think are some of the issues or pain points related to a specific product or service in the financial marketplace. And we can also help gain some understanding of consumers' baseline level of knowledge about a product. So are people generally familiar with the product? Is it something they've never heard about? Are there differences between people who are familiar with a product and people who are new to a product? And all of this information that we gather ahead of time helps us kind of break down what information we want to convey and how best to convey that information. So once we have thought about how to design the disclosure, we often conduct, as I mentioned earlier, consumer disclosure testing when developing a disclosure for a rule. And disclosure testing can include a wide range of activities. Typically, it's some sort of iterative disclosure development and problem identification process. And then we formally evaluate the effectiveness of the disclosure with various kinds of testing. So one type of testing that we may engage in, and we typically do, is qualitative testing. And so this can be anything from focus groups to one-on-one interviews, as well as usability testing, how people use the form to answer various questions. And it helps us to identify significant issues with a disclosure. So let's say we word something a certain way and everybody comes away with a completely different understanding than what we were intending to convey. We would learn that through these interviews or focus groups. And it's also helpful for gaining insight into the disclosure's likelihood of success in achieving a policy goal. So if we have a certain policy that we're trying to convey through a mandated disclosure and consumers the disclosure that kind of tries to convey that information, or they completely skip over something, that would come out as well in the qualitative testing, and we would be able to kind of highlight or note that maybe the policy goal we're trying to achieve is not really coming through in the disclosure. After we go through that development process, we then often submit the disclosure that was developed into quantitative testing, which is a larger, often experimental study where we present different versions of a form similar to A/B testing and try to see which version of a form or which type of language is most understandable to consumers in a larger quantitative survey. And this type of testing provides robust information about a narrow set of questions. So we might be interested in a very particular sentence or something that we're trying to convey in terms of understanding. And it gives us really clear information, statistical information about that. And it's also appropriate for these rigorous evaluations of disclosures. So some recent disclosure testing projects that we've done within the past 5 years or so, one was related to prepaid cards. So trying to figure out what information and how best to present information related to prepaid cards to help people shop. And as you may or may not know, a prepaid card you can buy in a store, and it's a small rectangle or square. And on the back of that provides information about fees and when people may be charged for various things. And so one of the challenges there was trying to figure out the best way to convey a large amount of information in a very small space on the back of the prepaid card so that people can look at it as they're shopping. And we also recently engaged in debt collection disclosure testing, where we provided a form for debt collectors to use that helps to provide the information to consumers that they need as part of the debt collection process. And so in particular for the debt collection testing, we did engage in several rounds of qualitative testing, focus groups, and one-on-one interviews to help us develop the form. And then we did an 8,000 person online survey experiment to compare various versions of that form that led us to the final form that was part of the rule. In addition to these very specific disclosure testing projects where we're testing comprehension and understanding of a particular form, my group is also very interested in and continues to do work on what we call more foundational questions around disclosure or common issues that are related to disclosures more generally, as opposed to a very specific disclosure that we're developing for a rule. In these studies, we attempt to explore these issues through more controlled studies. So these typically take on the form of laboratory experiments, and so either in person or online experiments where we're exploring general issues related to disclosure rather than a very specific one. So I'll give an example of a study that we did in the past few years related to this. And so in this lab experiment, we were interested in exploring the context in which a person receives a disclosure. And so the main question here was, does context or environment influence attention to a disclosure? So of course we can always, what's very important in terms of, for example, duty to explain, we always want to make sure that people are understanding the words that they're getting as part of a disclosure. But in addition to the actual comprehension of a disclosure, we believe that there are other things related to how people take in that information. So for example, how the form is set up, but also the environment in which they're reading the form or the disclosure. And so this type of context can include the features or the design of the disclosure, but also, for example, whether somebody is watching them read the disclosure or kind of timing, giving them some time pressure. So one example could be if you're trying to open up a bank account and the banker is standing right there as you're reading the forms, what does that potentially do to the consumer's attention to the disclosure when somebody is watching them read it? And so in this experiment, we manipulated the form, the design of the form itself, as well as the environment in which people were reading the disclosure. And this actually was published in Behavioral Public Policy Journal, if you'd like to go retrieve that and read the actual article that came out of this. And so as I mentioned, one of the things that we were looking at was the context of the form itself. And so I know I don't expect you to be able to read this from where you are, but just I'm going to highlight that in the green box on the top of the page on one form and on the bottom of the page on another form was basically asking participants to affirm that they would read the disclosure, or if it came at the bottom, to affirm that they had read the disclosure. And we also, in the red smaller rectangle, had some information that we were specifically testing as the piece of information that we wanted people to pay attention to. And so that was the box that if somebody did sign their name there or initial there, that was the measure of attention to the disclosure. If somebody didn't sign, then they didn't pay attention, whereas if they did, we took it as they did pay attention. And the reason we could kind of use that as a measure of attention is because it was an incentive compatible choice for them. And so basically it said, would you like to do a similar study again and get paid even more than you're getting paid now? And so we assumed if people read that, they would certainly want to do it. So that was the context of the form that we manipulated. And then interestingly, we also manipulated the environment in which people read the form. And so people could either read the form at their desk and then come up to the experimenter to get paid for the experiment that they were also doing as part of the study. It was a separate experiment. We were interested right here in whether they read the disclosure at the end, but they had also participated in a 45-minute study prior to that. So they came up to the experimenter to get paid. And the manipulation here was whether the experimenter was actually standing there watching them read the form, where they had to sign that they would read it, or whether the experimenter was not there, went into the back room to get the payment, and then came back. So the person either had the ability to read the disclosure on their own, or they were reading the disclosure in the presence of the experimenter. And so there was this experimenter present or absent condition, and then also how much time the person had to read the paper. So the experimenter either said, I'll give you a minute to read this, or they just basically gave them no time and stood right there as they were reading it. And so this is just the visual of the experimenter either being with the person as they're reading it or not. And really interestingly, what we found was that both the timing, how much time people were told that they had to read the form, as well as whether the experimenter was there watching them read the form, really affected attention. And so when the experimenter wasn't there and people were given a full 60 seconds to read the form, they had the most, they paid the most attention to that small box where they were supposed to sign their name. If the experimenter was standing there watching, but they did have 60 seconds to read, they paid less attention. And then in the worst case scenario is when a person is there watching you read and not giving you basically enough time to read. And so this was a really interesting way for us to explore context that this is a type of information that we can apply generally to disclosures as opposed to one specific disclosure. But this helps provide some foundational information related to the context of how people pay attention to disclosures. And so that's basically my presentation today. So we did talk about this duty to explain, which the CFPB kind of attempts to ensure by doing some disclosure testing on the specific disclosures that might be part of a rule. But we also have this ongoing effort to understand disclosure interaction more broadly so that we can best understand how people interact with disclosures and understand the disclosures that they might encounter as part of their financial decision making. Thank you so much. I appreciate you taking the time to listen to me today and enjoy the rest of the conference. Thank you.
Okay, I appreciate Dr. Knoll for the informative presentation. It was short, but quite informative. The keywords to me from her presentation are the timely and understandable on the viewpoint of financial consumers. And then it appears that the CFPB involves with rigorous the randomized experiments with many micro details in designing the effective disclosure form. So we can have more, the discussion among panel members, but that is the key takeaway I had from the presentation. Next, we will hear the colleague from BaFin in Germany. One excuse I like to make is that the pre-recording was quite difficult. The BaFin required this secured WebEx-based recording. So for that, our presider today, Jae-won had a hard time in finding the original video. So we are playing sort of our Plan B video that was recorded through her smartphone. So the screen would not be great, but it is also quite informative presentation. So with that, I will ask Miss Yu to play the Mr. Elsen's video.
Yeah, ladies and gentlemen, I would like to welcome you all. Unfortunately, only in a virtual space, not yet in a position to meet physically. Nonetheless, for me, it's an honor and also a pleasure to join this online seminar on investor protection. I will guide you through the German approach in investor protection. Of course, given the limited amount of time, I only chose some highlights. Let me start off, first of all, how is product information set up? Obviously, you have an overall concept of ideally standardized product information for retail consumers from the broad perspective. And then when you have singled out prospective investors, you initiate the contract negotiations and eventually become the policy holder on the side of the consumer. Here in the field of insurance, I chose insurance as an example, but for the other fields, it's quite similar. Let me show you the tripartite approach. as you can see, for product information, first of all, there's what we call the manufacturing. You set up certain products. You have to follow, of course, internal oversight rules. Then once you have set up the product, you give a basic information called the key information document as a reference for the consumers. And then in the next approach, when you start the sales and the distribution channels, of course, also all the stuff involved in the sales process have to follow certain distribution rules so that there's proper advice at all time. One highlight which I consider to be important is a good level and degree of standardization. Standardization has played a major role in the industry, and I think it's also the utmost prerequisite for the globalization when we think now here Germany, Korea, Americas as some areas worldwide. If we had not gotten proper standardization, it would be very hard to involve in international trade. So when you think of the more tangible products, like of course the metric system, standardization of screws or charging platforms for electric cars, or recently also on the European Union level at least, label on energy efficiency. So this is all some form of standardization, so irrespective of where you get the product, you know what is meant by a certain key elements. There is the same definition and same standard. In the field of financial products, this is still at a nascent stage, so there's still quite a process for the companies to fulfill a higher degree of standardization and harmonization, which I think is very important if you want to have it fully compatible and comparable in a free market economy. The key investor document in this field is a major tool and a main source of information, especially in the absence of any financial advice, since most of the questions the average retail investor would normally come across with are already addressed in this key investor document. So it's not just a legal jargon, it is written in a way that it should be plain English or plain German, so that it's understandable for laymen. And typically the questions you go through, what are the costs involved, what are the risks of a product, and what is the expected yield. One key aspect in this field is obviously risk attached to the product. So in that concern, there's some form of scoring to identify the risk attached to the product. And then, of course, it's very important to make sure the product is suitable to the investor regarding his knowledge, his risk appetite, and also his option to absorb losses getting involved in the product. On the other hand, of course, you don't want to only see the risk. Ideally, you want to have positive returns. So for that concern, the yield is also indicated in different scenarios. And ultimately here, since we talk here about insurance products, you see there are also beneficiaries. So someone who's left behind in the family might also catch a certain yield out of the product. One issue which has been very sensitive in the past is obviously the aspect of costs. Many companies were very reluctant to fully disclose the costs because they said it's confidential information, and sometimes it might even be misleading for the consumer because high costs doesn't necessarily mean that the product yield is low. Sometimes it's because we do better research, maybe, for instance. So in that concern, they were reluctant and hesitant in the beginning, but now it's become a standard. So the costs attached have to be properly disclosed. There's an additional external advisor attached in the sales process, and he or she also fetches costs, and it has to be disclosed. One major issue, I don't go too much into detail regarding the MiFID, since presumably also the European legislation, roughly speaking, is known to you. So I just here also want to catch a few points which are of relevance, in particular the suitability report. Since 2018, it is actually the successor of a German model which we already had since 2010, where we had a requirement that minutes of the protocol of the conversation between the advisor and the client had to be stated and handed out to the client. So this has been harmonized on a European level, slightly different touch. And what is very important is not the aftermath of the sales discussions, but it has to be handed over before the transaction, like sale or purchase of a financial product is carried out. So I think that's very important. So the client has this at hand. There was also the question, obviously, regarding internal control, how to make sure internally companies, financial services enterprises follow this requirement. On top of the legal requirements on the European and German level, we also have what we call in German MARCOM, or minimum requirements for the compliance function. And these minimum requirements are like guidelines for the company with additional requirements. I would say even slightly stricter than the minimum harmonization in place. And this internal control is guarded typically by a compliance officer who then goes through the details and looks at the transaction process, how to really make sure, okay, the suitability report was well fed by proper information and observed also really the risks attached. Another form of investor protection, which has been in place in Germany for a very long time, is the prospectus. On the one hand, it's a key source of information to make an informed investment decision. And on the other hand, it's a main source of civil liability. And as we talk about this, it has already an experience of 125 years, so a very long term experience with civil liability. And it's also a form of correcting the issuer, one would say, because obviously there's only limited resources of control when you have the prospectus filed to BaFin. But even if there are some flaws, omissions of information, which cannot be fully digested by BaFin check in a couple of working days, then the issuer will be held liable in the court. And I think that's a very important aspect we have to see beyond the supervisory law. Regarding securities offering, we have a full harmonization in Europe, so again, here I can refer to the European prospectus regime, but we have not achieved civil liability harmonization, and we also have no common approach for other investment products which are not by law in a securities manner. So for those, we have come up with a national solution so that we also require a prospectus in this field. And it's a very wide range of aspects: closed-ended investment funds, renewable energy, movie funds. We had at some point shipping funds were also very popular at some time, occasionally also tax-driven. And this has been further advanced by the Retail Investors Protection Act, which now is called Capital Investment Act since 2015. So we also address now new sources or channels of distribution, especially the crowdfunding, which typically is set out online, and where we also would like to see some form of prospectus information. I don't want to go into details, so you see we have come up with a good way to also move transparency beyond the harmonization which we have achieved in the European Union, since we have seen there are other financial products which occasionally are considered to be risky and at least before 2005 in particular, were not really subject to supervision, and gradually we have enhanced the standards, and now they are almost the same as for securities offerings. Another aspect which is very close and interlinked with consumer protection, obviously, is the field of product intervention. For almost a decade now, we have set up a particularly dedicated department called Consumer Protection, and for all the different fields, banks, insurance, and capital markets, dedicated sections. They go through the products based, of course, on complaints we receive. They also may take action, and usually in the past, or in the tradition of German continental law, this was more restricted. So the idea of product intervention is a pretty new idea. In the very past, there was always this idea: if there's enough transparency, if there's civil liability attached to the product, and there's no form of mis-selling, obviously, any financial product should technically or theoretically be also rendered to the clients. We do not want to over-protect clients and prevent them from certain products. They should have, in theory, the whole range of financial products. That for a very long time was a supervisory or was a policy philosophy, we could say, in Germany. But then in the past, we have seen more and more sophisticated products which are very hard to digest by retail investors, and sometimes products which capture a very high degree of risk, occasionally even more than the capital you've invested before. And this was the case, especially for the contracts for difference, which is somewhat like placing a bet on future development of, for instance, share prices or commodity prices. And then, of course, you can do, in terms of small volatility, you can have a very high profit if the market development is in the direction you expected. But if it goes the other way around, you may not only lose the capital you've invested, so total loss, which is hard enough, but if it goes further down, then you may even have the obligation towards the issuer to additional put your own money. So in the end, you could end up with massive debts. A very risky product where BaFin for the first time decided under the new rule of product intervention to issue a general administrative act, so it addresses all financial players in Germany, and there is, of course, a flexible approach. We don't just generally say contracts for difference are bad, and we want to scrub them from the market. No, there might be sophisticated investors who still are able to digest the risk, so why still not offering them? But regarding retail investors, we introduced a ban. We said at least those contracts for difference with additional payment obligation beyond the invested capital should be banned and should not be rendered to retail investors. So that was in 2017, a very new step, and in 2019, because some of the issuers still wanted to get some form of clarification, we have provided additional guidelines as to why and how we would like to see this ban implemented in practice. And what we also do, of course, we do, since we identified the risk, we have ongoing monitoring of CFD offerings, in particular making sure retail investors are spared from these risky features. Another aspect which I think one may shed light on, because it's particularly applicable to our jurisdiction, is the internal database, or you could also say register, of employees in the financial sector. So already in 2012, as I said, 2012 was very important also regarding investor protection in Germany, where we expanded the scope for BaFin, that officially, we also have now the role of retail investor protection. Investor protection as a whole in general is now our mandate. We have this new department. In another form to get closer to this was this register. And what is so special about the register? We have round about 150,000 financial advisors, mainly in banks, but it could also be smaller financial services enterprises, brokers and dealers and so on, without a full bank license. So you can imagine that's a very high amount of people who engage more or less daily with retail investors. And in the past, of course, the banks, let's say as example, because it's most prominent, I simply refer to banks here, they hired the staff, of course, they also checked the CV and so on, and normally they should make sure that they have enough expertise. But now we've lifted this requirement. It's not just the bank checking it, but we also have this kind of requirement. So we would get for each advisor some form of information in a bridged version of the CV to see where his or her expertise lies, what did he do in the past, maybe the studies, his long-term working experience, for instance, to make sure that we only talk about qualified staff, so in the field of investment advice, in the field of sales, but also, I think that should even be common sense, the compliance officer also needs a even higher degree of experience to fulfill the functions attached. So all these employees in the field, not every banker obviously, but all employees working in investment or sales have to be reported, and we get this information regarding expertise. So that's the beginning, but that's not where it stops. We continue observing these employees, and if we get complaints, we look and monitor very closely what happened and why was this complaint, especially when there are several complaints going in the same direction. Then we have the indicator that there might be a form of mis-selling or insufficient advice. And then, of course, in the ongoing banking, other financial services supervision, we would also raise this issue. We can do it through normal supervisory talk, but also in a harsher way, then ultimately in warnings, impose administrative fines, or ultimately, but of course that's something one would not like to see, a temporary ban on employment. But usually if there is a high degree of complaint about a certain person, maybe then you would remove him from the sales team, but he would then work, for instance, in a department where there's no exposure to clients, let's say, for instance, before someone loses the job, of course. But these are the form measures we can take, and it helps a lot because this is a very good reference for us to see to which extent the institution keeps track. And then, of course, compliance officer, internal control also have to make sure, even before it's reported to BaFin, to make sure these advisors are well trained, and if they see there are insufficiencies, they should send them for internal training or other form of rectification in this field. One other aspect, now that we are talking here in summer 2021, I would just like to highlight, as I said, since 2012 at least, consumer protection is an integral part of BaFin's activities, but now we see a further strengthening in investor protection. BaFin is undergoing a reshaping of our structure. We will get a new president. Maybe you've already heard from the news. Mr. Mark Branson will take over in August. But it's not just a change in personnel, but also we have set up a steering committee together with the Ministry of Finance, where we have identified particular areas where we would like to highlight and concentrate on in future. And one of these areas identified for investor protection, so department, investor protection, is further expanded. We will have 2 additional divisions. There's a new act to strengthen financial market integrity underway. I think it's about to be adopted by the German Parliament. The process is ongoing. And one other aspect which is new, at least in Germany, is also the option of so-called mystery shopping. So the idea that we don't only receive complaints from the general public, but in an anonymous way, BaFin staff may also render advice in a bank or in an insurance company to see to which extent those people really adhere to the rules. So I think it's a new angle of supervision, and but ultimately, of course, the most important is complaints management, where we see a growing tendency in the last 3 years. Each year, average 16% more. So a growing tendency. Last year we had about 20,000 complaints, which you can imagine is hard to work on each and every single one of them. So now we also try and go more into digitalization. From all what we hear, I think Korea is well advanced in digitalization, but we have learned in the field of homeschooling, Germany is not at your level yet. We've seen this in the time of the pandemic, but hopefully maybe at least that is one good lesson learned, that we also step up digitalization. So on that concern, we also try and standardize and digitalize complaints. So if there are standard complaints comparable, we would then feed those ones in the software tools. And of course, other issues you may not fit inside the box, you will still have them outside the system. And apart from the reactive complaint management, as I said, we want to take a more active role. Forensic research, maybe also this mystery shopping, depending on how that's structured. Closer cooperation with the Consumer Protection Association, which is set up on federal or also state level. We have 60 states in Germany, so closer to the people. And one other aspect which was discussed, maybe to expand the degree of prospectus scrutiny to maybe also enter the content more, to check, to verify and check the content rather than the formal requirements only. But that is a future project, because for the field of securities, it's harmonized by the European Union. So on that concern, Germany may not decide on this on their own. This is to put the current development, the German emphasis in a nutshell. So that's where we stand in summer 2021. But I can say there is a lot de lege ferenda. There's still a lot of ongoing restructuring and reshaping. And I can assure you that it will be not only a hot summer. We talk right now about 33 degrees outside here in Germany in terms of temperature, but also in terms of legislative measures. And I would like to invite you, fortunately the figures are dropping in the Corona context, to invite you that hopefully in autumn or later this year, we will have the chance to meet in person again, so that we have an academic exchange. There's a one-on-one. Thank you very much for your attention. Indeed.
Thank you thanks to Mr. Elsen. And as you saw, both video and audio were not top quality, and I'm sorry for that. The presentation was actually very useful one, and the couple of things that I just want to convey from the presentation is the key information document, KID. I had a discussion with Mr. Elsen afterward, And he told me that that template was EU level, the European Union suggested template, but Germany seems to be fairly unique. May not be the only country, but they add this summary risk indicator. It is a summary risk measure for financial product. So I think that was a very interesting way to segment the riskiness of financial product. And then that's communicated to financial consumers. So if they do that, that means someone has to measure and validate those product-driven risk. So to me, that's one interesting aspect of the German consumer protection system. Another thing that I found very interesting was the maintaining the employee database by the regulator. Mr. Elsen told me that they have about 150,000 employees of financial institutions, and they constantly monitor them in terms of their qualification, how many consumer complaints that a particular employee has. So in a sense, it's the individual employee level monitoring rather than institution level monitoring. So I found that as quite interesting, and I look forward to hearing views from other panelists later on. So then the last pre-recorded video that we want to play is from Italy. Miss Soccorso from the CONSOB in Italy.
Good morning, and thank you for the invitation. In the next few minutes, I will try to outline the main pillars of our toolbox for financial consumer protection and the responses that the European legislator and CONSOB have given to the challenges arising from the context in which regulators operate. The toolbox, as for the toolbox, our main tools are transparency and rules of conduct. Issuers have to disclose the characteristics of their own financial instruments in terms of expected returns, costs, risks, and have to publish their financial statements when and how regulation requires. Intermediaries must act in the best interest of their clients and in this perspective comply with both transparency and conduct obligations. Advisors and portfolio managers have to assess suitability. In other words, they have to check whether recommended financial products are suitable to the financial profile of their clients. In particular, rules of conduct are characterized by market graduation of obligation according to the type of clients as well as the type of service provided. This graduation makes it possible to contain the burdens on intermediaries without reducing the level of protection provided for retail investors, which are unsophisticated financial consumers who have less experience and expertise in investment matters. All the provisions concerning intermediaries, either rules of conduct or disclosure obligation, are therefore fully applicable when financial services is provided to retail investors. As for professional clients, rules are only partially disapplied. For instance, the rule of appropriateness is disapplied without prejudice to the rules on conflict of interest, best execution, and inducement. only in the case of the so-called execution-only services, the proportionality approach is based not on the nature of the client, but on the type of service. Neither suitability nor appropriateness assessment is required in the provision of execution-only services, but the services must refer to non-complex financial instruments. The services have to be provided at the initiative of the clients. The clients has to be clear informed about that, and in any case the intermediary must comply with obligation concerning conflict of interest. What's the issue with this toolbox? The issue is that this setting is rooted in the rationality hypothesis. The assumption is that the more information the better, as complete information triggers awareness and empower consumers. But the 2007-2008 financial crisis has challenged this standard paradigm, as well as the approach traditionally underpinned financial consumer protection. The subprime mortgage crisis has revealed structural problems of the securitization market, but also cause-effect relationship due to not rational behavior. Another example is mis-selling, the case when investors do purchase unsuitable financial products in spite of all the available information. In other words, the assumption that the people are rational has been shown to be unrealistic, and perhaps explain the limited effectiveness of some policies in the past. We learned that policymaking can greatly benefit from a better understanding of people's behavior. Therefore, international institutions and national jurisdictions have been launching behaviorally informed initiatives and policies. A rising number of policymakers have started to delve deeper in the individual decision-making process. CONSOB approach to such challenges is briefly illustrated in this diagram. We set up an investor protection system where traditional tools are revised in the light of evidence and actual behaviors of market players, and financial education complements transparency and conduct rules by enabling consumers to understand the characteristics of financial products, to properly interact with intermediaries, and to claim for compensation in case of misconduct, frauds and scams. The European Commission was the first to foster the inclusion in the regulatory cycle of a toolbox built on cognitive science. An example is the Joint Research Centre, the activity by the Joint Research Centre supporting EU policymaking by raising awareness and by training EU policymakers in the use of behavioral insights. Another example is the European Commission report on consumer decision-making in retail investment services, gathering survey data and experimental evidence on the process of researching, choosing, and purchasing retail investment products. As for disclosure, the 2010 European Commission report acknowledged that the presentation of financial information affects the decision-making process of retail investors, since relevant factors are not only financial literacy, but also behavioral biases, such as information overload, heuristic decision-making, and framing effects. The report stressed the need for simplification and standardization of product information, and on the evidence from this report have been grounded to investor protection tools, the KID for mutual funds and the key investor document for prepackaged retail and issuance-based investment products. As for rules of conduct, suitability assessment, in particular, ESMA, which is the European Securities Market Authorities, warned about cognitive distortion, first of all, framing effects, that need to be accounted for when structuring suitability questionnaires, with special reference to risk tolerance and any attitude sensitive to psychological and emotional factors. CONSOB has been working on behavioral finance and its application to financial consumer protection since 2010. So far, we have published working papers and organized several conferences on related issues. In 2010, we published a research paper, was the first of this thematic area. This paper surveys and discusses the insights of behavioral finance. Then we set up our evidence-based approach, collecting information on consumer choices and making the most from information gathered through supervision and compliance data. In particular, the design of our research project and of our initiatives is based on the evidence gathered through complaints analysis, the insights stemming from the debate at national and international levels with both academics and market players, and the evidence gathered through CONSOB Observatory on the approach to finance and investments of Italian households, whose results are published on an annual basis. In 2012, we published a study on the questionnaire used by the Italian intermediaries for the suitability assessment with respect to contents, validity, reliability, as well as the way questionnaire are structured and administered, which were our main findings. Well, knowledge and experience assessment questions often relied on individual self-evaluation and were not aimed at verifying, for instance, familiarity with basic notions such as the relationship between risk and expected return and portfolio diversification. Risk tolerance elicitation was mainly based on self-evaluation. Cognitive and behavioral biases which could induce fraud answers were neglected. Questions were often vague, ambiguous, and used complex language unlikely to be understood. Well, it was 2012. Things are supposed to went better and better, and we hope to repeat this analysis and find more favorable results. Methodology and evidence published in this discussion paper have been shared with other European regulators in the occasion of the definition of the 2018 ESMA guidelines on suitability assessment and inspired investor education initiatives. I refer in particular to several frontal lessons and webinars organized with trade association, consumers association, and groups of vulnerable citizens. In 2015, we ran a consumer testing exercise concerning the risk disclosure of financial products. Together with an Italian university, we investigated in particular the subjective understanding and perception of financial information and the impact on investment decisions. We explored how different representation formats are appraised in terms of complexity, usefulness, and information content, how different templates influence risk perception, and how different templates affect willingness to invest. And the results of this research have been published on the European Journal of Finance. Finally, also our investor education initiatives are grounded on the same evidence-based and behaviorally informed approach to investor education. This approach allows us to answer the question you can see in the slide: how can we engage individuals in financial education programs? For instance, we understood that investor education programs may best address consumers' needs if they are designed in order to take into account perceived relevance of information contents and moods and emotion that may affect the learning experience. And these initiatives may be more effective whether teaching methods aim not only at delivering information contents, but also to highlight the biasing which may contribute to enhance the quality of financial choices. Many thanks.
Okay. Thanks again. And like in the US case, Italia appears to be involved with lots of experimental studies in order to better understand the issue of behavioral bias and to reflect the findings in the policy decisions. I also talked to Paola after her presentation because I was quite curious about one particular part of her presentation. There is a marked graduation of obligations. That means the obligations for financial productions are differentiated. Financial consumer protection, they are differentiated according to the type of client. So in Italy, there seems to be 3 different types of client. One is called as eligible counterparties, sort of most suitable consumer segment for a particular product. The next one is professional clients. And in addition to those 2, there is a group called retail clients, which is a sort of a residual group. You know, excluding the first 2 groups, they also define another group. And then depending on the type of client, they apply or waive different requirements. I don't have all the details, but she told me that they define 3 different consumer categories. And they also differentiate the requirement based on the service providers, the different types of service providers. So it sounds like the brokerage type operation are usually, you know, the required less regulatory duties and the regulations. Okay, so I think that was sort of one additional aspect that I want to report to everyone. So we now want to go to our colleague in Australia, Professor Andy Schmulow. Andy, go ahead.
Thank you very much, Professor Cho. A very good morning to my colleagues in this part of the world, a very early good morning to colleagues in Europe, and a good evening to colleagues in the United States, and an especially fond hello to our esteemed chairman, Professor Cho, and the founder of our organization, Professor Jung, and other colleagues who I've come to know, Professor Tennyson, etc. Perhaps I could share a screen with you. Let me. Right. So I'm going to make some comments on the papers that we've heard this morning. And the first point I'd like to make is how interesting it is to see the convergence of a number of core principles between various jurisdictions. And in particular, I refer to the treating customers fairly framework that was developed in the United Kingdom and introduced into the United Kingdom in legislation in 2005, and then subsequently copied in South Africa from 2011 onwards, and shortly to be promulgated in legislation in South Africa, legislation that I was involved in drafting, the very aptly and very appropriately named Conduct of Financial Institutions Act. And as the name of the legislation implies, it goes to how financial institutions conduct themselves. And the Treating Customers Fairly regime has 6 core principles, and you'll see that these core principles are very similar. In fact, they are, with the exception of 1 or 2 words that have been changed, they're identical in the United Kingdom, or rather they're identical in South Africa, which copied the United Kingdom. Just a note, just a side note that might be of some interest. One of the things that the South African authorities did, which I think was very shrewd, was that they introduced a Treating Customers Fairly regime in 2011, but made it merely aspirational. And the reason this was so shrewd is because it prevented any pushback from industry, from the financial industry. So financial industry firms initially responded by saying, well, it's aspirational. That means we don't have to comply, so don't worry about it. I guess about 3 or 4 years went by. And during that time, the first thing that happened was that there was a market response. So firms started to use TCF compliance as a form of comparative advantage, if I can put it that way. They started to say to their customers, you can trust us and you can have confidence in dealing with us because we have internalized the Treating Customers Fairly regime. And that led to other competitors having to get on the bandwagon. Then in about, I guess about 2014, the South African authorities started to say to firms, the aspirational TCF regime, it is aspirational, you don't have to comply with it, but if you don't comply with it, when we come and speak to you, we'd like to know why not. And this is an interesting dynamic in the way in which it shifts the softest form of soft law and starts to make it harder. Then in 2017, with the enactment in South Africa of the Financial Sector Regulation Act, which was the first of 2 pieces of legislation to introduce the Twin Peaks regime into South Africa. The Twin Peaks regime first adopted in Australia in 1998 and subsequently copied as a regulatory model in Belgium, the Netherlands, the United Kingdom, New Zealand, and with a number of other countries contemplating or discussing the introduction of a Twin Peaks regime, including South Korea, and some talk about adopting a Twin Peaks regime in Kenya, in Nigeria, in Canada. In 2004, there was some discussion briefly about adopting it in the United States. But in 2017, when the Financial Sector Regulation Act was enacted, the authorities in South Africa said to regulated entities that aspirational regime, which first was purely voluntary, and then later we started to say, well, it is purely voluntary, but if you don't volunteer to adhere to it, we'd like to know why not. The authorities then informed financial service providers that legislation would be enacted and would make the TCF regime a legal requirement, and that will be that will take effect when the Conduct of Financial Institutions Act is enacted in South Africa, hopefully later this year. And as I say, one of the things that I think is very interesting about the presentations we've heard today, especially the presentations from colleagues in South Korea, is the extent to which one can map the initially British TCF regime to what is happening in countries like South Korea. So let's go through some of these principles. Outcome number 1, consumers can be confident that they're dealing with firms where the fair treatment of customers is central to the corporate culture. I'll come back to that. Outcome 2, products and services marketed and sold in the retail market are designed to meet the needs of identified consumer groups and are targeted accordingly. Outcome 3, consumers are provided with clear information and are kept appropriately informed before, during, and after the point of sale. Where consumers receive advice, the advice is suitable and takes account of their circumstances. Outcome 5, consumers are provided with products that perform as firms have led them to expect, and the associated service is both of an acceptable standard and as they have been led to expect. Outcome 6, consumers do not face unreasonable post-sale barriers imposed by firms to change product, switch providers, submit a claim, or make a complaint. Now these, I should explain, because no doubt some of you are saying to yourselves, these are very broad principles. How are these principles defined? How do we know whether, for example, fair treatment has been incorporated and become central to the corporate culture of the firm? So let me just address that point first. The British regime and the South African regime and the Australian regime was supposed to be the same, but it hasn't worked out that way, was supposed to be in Australia and has been in the United Kingdom to a degree, and I think to a far larger degree now in South Africa, a two-step process. So the first is that the legislation expresses broad principles, and those broad principles are then backed up with more specific regulation, specific rules on how some of these things are defined. That's a very nuanced and tricky and delicate process, because one of the things that we have come to observe about the financial industry is that black letter law, rules-based and prescriptive regimes that lay down very tight and very clearly defined definitions don't work well in the financial industry. And the reason for that is that the financial industry innovates too quickly for specific rules to keep pace. And that's because the financial industry, as I say, innovates too quickly. Some of that innovation is real. For example, artificial intelligence, AI, or robo-advice. But a very great deal of that innovation is faux innovation, it's fake innovation, and is simply a product of regulatory arbitrage. So working from the point of departure that we understand that if you delve too deeply into the specifics, if you construct a regime that is too prescriptive, too rules-based, too black letter law-based, where outcomes are determined by the way a court will define a particular word, those regimes don't work well. So what has happened in Britain and to a very large degree in South Africa, which I've come to regard as something of a benchmark leader, is to enact in legislation broad principles that give direction to firms on how they should conduct themselves. And those broad principles are then supplemented, carefully supplemented, hopefully not too extensively supplemented by specific rules that are laid down by the regulator. So if you look at the first rule, consumers can be confident that dealing with firms where the fair treatment of customers is central to the corporate culture. And if you say to me, well, how do you know when that's the case? In these regimes, the answer is as follows. The regulator will look very often to the outcome that has been achieved, and where the outcome is bad, where the outcome has damaged consumers, then the regulator will seek to know will seek documentation and will seek attestations and will seek information from financial service providers to evidence how it is that the fair treatment of customers is central to the firm's corporate culture. And there are ways that that can be evidenced. So, for example, a firm can provide evidence of how a product is created and provide evidence of the product or service life cycle. The product or service life cycle is more extensive than the customer journey, because the customer only comes in to the picture at the point where the product or service begins to be sold or marketed. Whereas the life cycle of that product has begun much earlier. It's begun at the stage of conception of the idea of this product. And what firms can evidence is they can show how they have set about creating lines of inquiry and how those lines of inquiry affect the creation of that product or service, and how those lines of inquiry always put the customer first. So, for example, in an old-fashioned environment, a bank might bring a new product to market, and where that product is designed or created, the first inquiry will be, how much money can we make? How much profit can we make from the introduction of this product? Who can we market it to? Who will buy it? How can we convince people to buy it? That's a pre-TCF regime type mentality. A post-TCF regime mentality doesn't start off by saying, how much money can we make from the product? That question is in there, of course. These are firms that are in business to make money. If they don't make money, they won't stay in business. But instead of making that inquiry, how much profit will we make, instead of making that inquiry the first inquiry, they can show that their lines of inquiry start off with, how will this product be of value to our customers? How can we change the product to make it better value for our customers? Who will be the target market for this product? Will there be markets for whom this product will cause damage? So let me give you an example. Excuse me. You could have an all-risk insurance policy that has a deductible. So that's the first part that has to be paid by the consumer, that's very large. Those products are very good for people who want to spend less money on their insurance, but want to be insured in case their house burns down and everything in it is lost. But that product isn't good for a consumer who doesn't have a house full of valuable possessions and who wants to be able to claim if they lose their sunglasses on the beach or they lose their camera because the deductible is too large. So for that second group, that insurance product would be what we would call junk insurance. So part of the inquiry that a firm that is TCF compliant will make is, which target markets should we not be marketing this product to? Which target markets will this product do damage to? And how are we going to avoid incorporating people from that target market into the sale of this product? How are we going to market this product in such a way that it is clear, it's understandable, the risks are made clear? How are we going to provide disclosure? Now, disclosure is a particularly interesting aspect in a country like South Africa with very high levels, not just of financial illiteracy, but of ordinary illiteracy. With a population with 55 million people, of whom an estimated 30% are unemployed, and where there are high levels of illiteracy, providing a very comprehensive 100-page disclosure document that's full of very fine detail is simply going to be lost on that consumer. So there would be included inquiries as to how we market this product in such a way that the target market will understand the product and its risks. And then, how much money can we make? So all of those inquiries, all of those processes, all of those procedures can be documented. And the process by which those questions have been asked and answered in the formulation of that product can be documented. The second outcome, products and services marketed and sold in the retail market are designed to meet the needs of identified consumer groups and are targeted accordingly. So I've addressed that to a degree. It's very important that products and services be marketed to appropriate markets and appropriate target markets, because if they're marketed to inappropriate target markets, the product or the service can do damage. Interestingly enough, and here there's a divergence from the Korean model, in South Africa, wholesale investors, sophisticated investors, are also covered by the Treating Customers Fairly regime. So there's an obligation on firms to treat wholesale and sophisticated investors fairly as well. And this is something that I think bears consideration. There's a notable case in Australia, the case of Wingecarribee Shire Council versus Lehman Brothers, where a number of city councils took the liquidators of Lehman Brothers to court and claimed damages from Lehman Brothers because they said, we were lied to, we were deceived, we were given incorrect information about the products that we bought from Lehman Brothers. And Lehman Brothers stepped back and said, well, you're a city council, you're a large institution, so we classify you as a sophisticated investor. When in point of fact, those city councils weren't sophisticated investors. Yes, they were large corporations, and yes, they had multi-million, perhaps even multi-billion-dollar budgets, but they weren't staffed by people who understood these complex synthetic derivatives that Lehman Brothers was marketing. So I think that's something that's worth considering, whether wholesale and sophisticated investors should also enjoy a degree of protection. And part of the reason
yeah, sorry to interrupt, but I know you can go on 2-3 hours.
Yes,
but could you wrap up in a couple of minutes?
Yes, sure. Some of the things that I thought were curious about the Korean model is the exclusion of deposits. Deposits in a low interest rate environment can be damaging to a customer. And it seems to me that there would be grounds for including deposits. I query why hedge funds are excluded. I think that CEO sanctions is a very useful tool. We have failed dismally in Australia and in the United Kingdom to hold directors and CEOs to account. And if South Korea is able to hold CEOs to account, that puts a great deal of pressure on the CEO to ensure that the firm that he or she is running is compliant. One of the things that has been a common thread throughout the presentations is the role of financial education. And that is certainly something that is very well canvassed in the South African legislation. And I think that it is a tremendously beneficial development to include financial education. My last 2 points, I thought that the colleague from the CFPB, I thought that her remarks about the way in which the CFPB has really drilled down into the psychology of disclosure and used psychologists and behavioral psychologists, I think is a tremendously valuable approach, and I think one worth emulating. And finally, the risk heat map that the colleague from BaFin introduced. We have something similar on our washing machines and our fridges, where it shows you how many stars, it gives you the number of stars for the energy rating. I think that's a really useful thing to give consumers in terms of understanding the risk profile of a product. I'm sorry I've gone on too long, Professor Cho.
Okay, thank you very much. Very useful discussion. And let's move on to the next panelist, Mr. Yeonggeun Kim from Financial Services Commission in Korea. And thank you for joining us. Now the floor is yours.
네, 안녕하세요. 다른 연사분들처럼 따로 이렇게 프레젠테이션 자료를 준비하지 못해서 죄송하게 생각을 합니다. 몇 가지 이제 앞서 말씀하신 말씀에 대해서 몇 가지 또 추가하여 말씀을 좀 드리고자 합니다. 우선 외국에서 오신 분들도 많이 계셔서 제가 소속되어 있는 금융위원회가 어떤 조직인지에 대해서 간략히 좀 말씀을 드리겠습니다. 한국에서는 금융 소비자 보호 정책뿐만 아니라 금융 정책에 대한 제반 사항을 다 금융위원회에서 관장을 하고 있습니다. 저는 지금 이제 금융 소비자 보호 부서에서 일을 하고 있고요. 그래서 금융 소비자 보호 법령이라든지 제반 제도에 대해서 책임을 지고 정책 업무를 수행하고 있습니다. 우선 이제 저희가 이제 이 법령을 통해서 기대한 효과는 종전에 이제 개별 금융업법에서 여러 가지 이제 금융 소비자 보호에 대한 규제들이 산재되어 있다가 통합이 됨으로 인해서 여러 개별 업권들 간의 규제 차이가 좀 해소될 수 있다는 점, 그리고 이번에 새로운 금융 소비자 권리가 도입됨으로 인해서 소비자 권리가 좀 강화될 수 있다는 점, 그리고 이제 제재가 강화되었기 때문에 아무래도 집행이 좀 강화될 수 있다는 점, 이런 점을 들 수 있을 것 같습니다. 현장에서 이제 체감하고 있는 부분에 대해서 좀 말씀을 드리면 아무래도 이제 제재가 강화되었기 때문에 상당히 그런 부분에 있어서 업권에서는 상당히 이 소비자 보호 규제에 대해서 경계를 가지고 자체적으로 소비자 친화적인 환경을 조성하기 위해서 노력하고 있는 걸로 알고 있습니다. 업권에서 이렇게 많은 이제 얘기들이 있는 부분이 규정이 세세하지 않기 때문에 상당히 예측 가능성이 떨어진다라는 얘기가 많이 있고, 그래서 가이드라인을 요구하는 목소리가 많이 있습니다. 하지만 아시다시피 금융상품이라는 판매 형태가 너무나 다양해졌고, 또 최근 이제 핀테크와 같은 이제 새로운 비즈니스 모델이 등장함에 따라 가지고 법령으로 경직적인 법률로 세세하게 규율해야 되는 한계가 있다는 것은 다들 공감하실 거로 이해합니다. 따라서 앞으로 우리가 좀 해야 될 부분은 필요한 범위 내에서 가이드라인과 같은 소프트 레귤레이션으로 적절히 활용해서 그렇게 감독을 해 나가는 게 맞지 않나라는 생각을 가지고 있습니다. 그래서 저희가 법이 시행된 이후에 적합성 평가라든지 설명 의무 이행이라든지 투자 상품의 위험 등급 마련이라든지 이런 부분에 대해서 가이드라인을 마련을 하고 있고, 한편으로는 금융회사들이 궁금해하는 부분에 대해서 질문하고 답변할 수 있는 그런 채널을 만들어서 적절히 운영하고 있습니다. 앞서 미스터 슈말로우께서 좀 궁금해한다고 하신 부분이 계셔가지고 말씀을 좀 드리겠습니다. 적합성 원칙과 관련해 가지고 저희가 예금성 상품에 적용하지 않은 이유는 무엇보다도 이제 금융 상품의 어떤 계약은 우선적으로 이제 자기 책임의 원칙에 적용돼야 된다고 생각을 하고 적합성 원칙의 적용은 그럼에도 불구하고 소비자가 보호 필요성이 강한 경우에는 그 소비자 선택권을 일부 제한해야 된다는 그런 필요성에서 만들어졌다고 생각을 합니다. 그래서 예금성 상품과 같이 소비자 피해 우려가 크지 않은 경우에는 그런 선택권을 제한하면서까지 적합성 원칙을 적용해야 될 필요성은 크지 않다고 판단했기 때문에 그래서 저희가 이제 적합성 원칙은 적용하지 않았습니다. 뭐 소비자 보호법 전반에 대한 어떤 설명은 제가 뭐 더 이상 드릴 필요는 없을 것 같고요. 앞서 두 분의 연사께서 너무나 잘 설명해 주셨기 때문에 제가 추가적으로 설명드릴 필요는 없을 것 같습니다. 다만 저희가 이제 이 법을 만들면서 외국의 사례를 상당히 많이 참조를 했습니다. 그 앞서 독일에서 말씀하셨던 KID라든지 그리고 그 리스크 평가라든지 그리고 상품 판매 계획권이라든지 이런 여러 가지 제도들이 저희가 이제 이 규정 금융소비자보호법을 만들 때 거기에 대해서 연구를 많이 했고 그런 제도들을 저희 법령에도 많이 도입을 했습니다. 그리고 저희 법령의 특성 중에 하나가 내부 통제 기준을 강화했다는 건데요. 이것도 이제 글로벌 스탠다드에 맞추기 위해서 기업들이 소비자 친화적 문화를 조성하기 위해서는 아무래도 기업 스스로 내부 통제를 강화하는 게 필요하다는 판단 하에 이런 제도를 도입하게 되었습니다. 뭐 여러 가지 드리고 싶은 말씀은 많습니다만은 시간적 제한이 있어서 간략히 이것을 드리려고 하고요. 오늘 앞서 이제 여러 다른 국가에서 말씀하셨던 것 중에 인상 깊었던 것은 실증 연구를 많이 활용하신다는 거였는데요. 특히나 이제 서명 의무라든지 그 적합성 평가라든지 이런 부분에 있어서 실증 연구를 활용하시는 게 많이 인상 깊었습니다. 그래서 저희도 앞으로 가이드라인을 만들 때는 이런 실증 연구 부분에 대해서 저희도 좀 많이 활용을 하고 또 앞서 이루어진 연구도 많이 참조할 수 있도록 하겠습니다. 마지막으로 이 회의가 비대면이라서 상당히 아쉬운데요. 물론 이제 제도를 아는 것도 중요하지만 그 제도가 각 국가에서 어떻게 움직이고 있는지, 뭐 제대로 작동되고 있는지에 대해서 아는 것도 되게 중요하다고 생각이 됩니다. 그래서 대면이었으면 이런 부분에 대해 가지고 좀 얘기도 여쭤보고 고민도 나눌 수 있었을 것 같은데 하는 아쉬움은 있습니다. 앞으로 이런 기회가 또 있다면 또 기회가 주어졌으면 하는 개인적인 바람이 있습니다. 예, 이상으로 마치겠습니다. 감사합니다.
Okay, thank you, Mr. Kim, and I wholeheartedly agree with you in that after the COVID crisis, we can have a in-person meeting, which I hope we can do it as soon as possible. So that part, I'm very sympathetic to your statement, and thank you for your remark. And then next, let's go to Miss Yeonggeun, and she has fairly hands-on industry experience as an ombudsman in Korea. So she will document some of the industry-driven outcomes of the new law. Ms. Jung.
네, 안녕하세요. 네, 금융과 행복 네트워크 정은영입니다. 장시간의 그 세미나가 이루어지고 있는데요. 이제 곧 끝날 것 같고 막 굿모닝이 아니라 애프터눈으로 넘어간 것 같습니다. 제가 그 앞에서 두 분 발표자들과 또 해외 사례들을 들으면서요, 굉장히 그간 고민했던 많은 문제들이 아마도 잘 해결될 수 있지 않을까라는 그런 생각들을 좀 해봤습니다. 일단 저는 그 앞에 두 분의 교수님께서 말씀하신 내용들은 너무나 다 전문가적 입장에서 잘 알고 계실 거고, 제가 금융 엄부드만으로 활동하면서 그리고 금융 소비자들을 접점해서 만나면서 그 어떤 문제점이 현재 우리나라에 있고 그런 문제점들을 해결하기 위해서 우리가 회의 사례의 어떤 지금 말씀을 들은 여러 가지 것들을 우리 문화에 맞게 어떻게 적용하면 좋을지 뭐 이런 생각들을 좀 같이 나눠보도록 하겠습니다. 일단 이제 제 자체가 그 금소법 시행 이후에 금융회사의 금융인들을 많이 만나고 금융 소비자들을 만나면서 가장 불편하게 느끼고 있는 것들은 이제 카드 발급이나 통장 개설 그리고 펀드 구매에 이르기까지 너무 많은 시간이 걸린다는 것입니다. 그래서 현장에서의 금융인들뿐만이 아니라 또 금융 소비자들도 이러한 제도가 얼마나 좋고 또 이러한 제도가 만들어졌다라고 하는 것 자체를 모르고 계시기 때문에 이제 폭발적인 그런 어떤 불만이 나오고 있고 또 이런 불만을 많은 언론사들이 어떤 객관적인 측면에서 보도하기보다는 좀 불편한 점들만 더 많이 보도를 하고 있는 상황인 것 같습니다. 어찌되었건 우리나라가 금융소비자보호법이 통과되는데 이 10여 년이라는 시간이 걸리고 시행되는데 왜 시장의 주체들이 모두 다 좋다고 하는 사람들이 없을까라는 고민을 하면서 아마도 이 판매 접점에서 이제까지 관행 쪽으로 해오던 그런 익숙한 처리 방식들이 이 금소법 테두리 안에서 어떻게 위반되지 않고 할 수 있을까, 이제 그런 법적인 가이드라인에 대한 어떤 대응책, 여기에 아직은 시급한 상황인 것 같고요. 현재 그 접점에서 그 소비자들을 만날 때 금융회사의 직원들이 또는 소비자들이 어떻게 실제 액팅하는 것이 소비자 지향적인 설명 의무와 적합성의 원칙을 잘 하고 있는지에 대해서 정확히 모르고 있다고 저는 판단됩니다. 그래서 이제 구체적인 명확한 확실한 행동 가이드라인이 이제는 필요할 것 같은데요. 많은 업권의 연수원이나 협회들이 이미 금융소비자보호법 시행에 대해서 어떻게 대응해야 한다라는 교육을 시작했고 또 그에 관련된 많은 교육들을 하고 있다고 이야기를 하고 있습니다. 그러나 실제적으로 내용은 금융인들이 현장에서 소비자 지향적으로 어떻게 행동하고 내가 소비자에게 하는 것이 적합한지에서 자세히 모르고 있는 교육을 받고 있는 것 같습니다. 그래서 제가 다시 말씀을 드리자면 이번 국제소비날을 통해서 이제 앞으로 그 금소법 시행령 중에서도 금융상품 자문업이랄지 내부통제 기준, 뭐 그다음에 자료의 기록률 유지관리 이런 것들은 아직 시행령이 되기 전이기 때문에 저희가 이런 해외 인플리케이션을 활용해서 더 좋은 내용들이 나오지 않을까 생각이 드는데요. 일단 이제 첫 번째는 설명의 의무와 적합성 원칙에 있어서 저희가 가장 중요한 건 해외사를 보더라도 어느 정도의 정보를 소비자에게 물어보고 제시하도록 하고 판단할 것인가, 그리고 어떻게 설명할 것인가 라는 것인데 앞에서도 해외 사례 보셨듯이 어떤 질문을 하는 것이 소비자들에게 아주 그 오해가 되지 않고 미스리딩 하지 않고 잘 이해될 수 있도록 설명할 것인가, 그 다음에 어떤 자신의 재산 상황이랄지 소비자의 금융상품 취득 경험에 대해서 알려면 어떤 문항을 물어봐야 될 것인가, 이런 거에 대해서는 앞에서 그 미국의 CFPB의 놀 박사님과 그 다음에 그 이태리의 그 파올로 선생님께서 말씀하신 그런 커뮤니케이션이나 또는 심리적 기반, 행동 증거 기반에 따른 어떤 데이터베이스를 구축하고 그런 연구들을 굉장히 많이 한 다음에 설명의 의무를 어떻게 하라라고 하는 이 언어적인 것뿐만 아니라 비언어적인 의사소통에 이르기까지 저는 상당히 세부적인 가이드라인이 나와 있고 그에 따라서 하지 않았을까라는 점에 비추어 볼 때 저희가 그런 점에 있어서는 앞으로 굉장히 노력해야 되는 그런 부분이라고 생각해서요. 금융사는 자신들이 파는 금융상품에 대해 합리성에 기반한 더 많은 정보를 소비자에게 알아야겠지만 보다 중요한 것은 누구를 위한 더 많은 정보이냐의 기준이 중요할 것 같습니다. 그래서 소비자의 행동 트랙이나 그다음에 소비자의 규칙을 알 수 있는 중요한 정보가 파악되어야 되는 것이지 금융사가 여러 가지 불안전 판매를 하는 데 있어서 위반되지 않는 정보에 대해서만 초점을 맞추면 안 될 것 같습니다. 그래서 심지어 제가 알기로는 영국에서는 이 정보를 노출할 때 상품의 위험과 기대 수익에 대한 비용, 필요한 경우에는 내가 이 상품을 받아서 어느 정도의 수수료를 받고 있다는 것까지 노출하고 있다고 알고 있습니다. 그래서 현재 설명 의무나 적합성 원칙에 이용되고 있는 적합성 원칙의 적정성 원칙의 양식을 제가 금융회사가 활용하고 있는 그 양식을 들여다봤습니다. 그런데 사실 그 이전보다 훨씬 더 많은 질문을 하고 있지만 소비자에게 설문 문항을 물어보면서 얻는 그 정보로서 소비자가 적합한지 적정성인지를 판단할 수 있는 그렇게 세분화된 또는 복잡하다는 의미가 아니라요. 그렇게 적합한 설문 문항인가라는 의구심을 갖게 됐습니다. 그래서 영국이나 이태리나 다른 나라처럼 이런 어떤 설문 문항을 물어볼 때 이 설문 문항 자체가 잘 맞는 문항인지를 저희가 다시금 판단해야 되고 독일 같은 경우에는 그런 것들에 대한 어떤 관리 직원이랄지 또는 영국 같은 경우에도 그런 그 보고서들이 실제 잘 되어 있는지를 감독 기관에서 모니터링을 하고 있는데 아시다시피 우리나라는 이제 금융위원회가 그런 굉장히 많은 미국이나 이런 다른 나라 영국에서 할 수 있을 만큼의 많은 일들을 할 수 있을 만큼의 그 인력 배치가 저는 아직 안 됐다는 생각이 좀 들고요. 뒤에서 말씀드리겠지만 그래서 저희도 이 상품의 근본적인 그 문제를 좀 해결할 필요가 있는데 너무 복잡한 상품을 만들지 않도록 노력해야 되고 두 번째는 정말로 우리가 6대 판매 원칙 설명 의무와
아까 토론 중이었는데
원칙에 대해서 적합성 원칙에 대해서 정말 잘 소비자에게 물어보는 정보를 받아야 되는데 적합한 항목을 물었는지 이런 것들에 대해서 소비자의 정말 니즈나 이런 것들이 반영됐는지 소비자의 행동 트랙이 규칙이 반영됐는지 이런 것들을 데이터를 가지고 조사 연구하고 경험적 증거 수집을 해야 되는 그런 상황이라고 보여집니다. 특히 그 이탈리아에서 보듯이 심리 측정 접근법이랄지 이 BI에 따라서 적합성 설문 분석을 했는데요. 우리는 제 욕심에는 좀 더 나아가서 이제 소비자들에게 뭐 어땠어라고 물어보는 것은 상당히 그 바이어스가 있고 또한 미스리딩 되지 않기 위해서는 언어적 소통 측면뿐만이 아니라 비언어적인 소통 측면에서도 유발할 수 있는 많은 부분이 있기 때문에 그 미래기술 혁신에 대한 어떤 인공지능 시스템 이런 것들을 이용해서 보다 소비자가 꼭 묻지 않아도 뭔가 트랙이 되면 행동의 어떤 증거 기반으로서 활용될 수 있는 어떤 이 팩트들을 우리가 좀 앞으로 점점 만들어가서 표준화 작업 같은 것들이 필요하지 않나라는 생각을 했습니다. 두 번째는 저희가 이제 좀 말이 길어지고 있어서 좀 줄여보면요. 그 내부 통제 기준 관련해서는 앞으로 9월에 시행령을 앞두고 있어서 좀 더 신중하게 지금 논의가 되면 좋겠다라고 생각이 드는데요. 마지막에 그 호주의 앤드류 슈말러 교수님께서도 말씀하셨지만 고객 중심 지향적인 그런 어떤 문화라고 하는 것이 굉장히 중요하다라는 말씀을 하셨는데 그래서 내부 통제 기준은 어찌 보면 소비자 보호법에 들어가 있긴 하지만 내부 직원이 준수해야 되는 통제 기준이고 그런 의미로 봤을 때는 직원들에게 있어서는 훨씬 더 중요한 의무사항이라고 저는 생각하고 있습니다. 그래서 금소법 안에 법적 근거 조항을 두고 이런 어떤 금융소비자적인 지향적인 또는 금융윤리적인 역량이라고 하는 것은 우리가 윤리와 도덕을 조금 더 구별할 필요는 있겠지만 자기가 그 이해상충의 문제가 발생할 만한 이 프로페셔널한 의사결정 과정에서 무엇이 옳고 그른지에 대한 이 판단을 할 수 있는 그런 금융윤리 역량이랄지 이런 것들을 갖출 수 있도록 이미 뭐 영국이나 미국에서는 그런 금융인에 대한 윤리 인증 자격이랄지 이런 것들이 중요하게 생각되고 오랫동안 또 이루어졌고 거기에 대한 보고서와 리포트를 감독 기구들이 받고 있다라고 저는 알고 있기 때문에 그런 부분에 있어서 문화를 조성하는 데 있어서 그런 어떤 금융인의 윤리 역량을 함양할 수 있는 이런 것들도 같이 검토가 되면 좋겠다고 생각했습니다. 그리고 이제 세 번째는 담당 그 금융감독국의 누가 해외 사례에서 어떤 분께서 말씀을 하셨던데요. 이 감독에 있어서의 그레이 마켓이라고 하는 표현이 굉장히 잘 와닿았습니다. 그거는 이제 지속적인 감독 규정을 어느 정도 할 수 있느냐인데요. 지속적인 감독 규정을 계속적으로 하기 어렵기 때문에 사실 문화라는 것이 만들어져야 되고, 또 초창기에는 어쩔 수 없이 금융의 특성 때문에 규정화하는 것이 굉장히 필요하고 세부적인 가이드라인도 주는 것이 중요하지만, 이제 어느 정도 시장에서 이런 것들이 잘 이루어지게 되면 아주 세세한 것은 그 호주의 교수님께서도 말씀하셨지만 오히려 시장의 실효성을 부족하게 할 수 있기 때문에 그러한 점들도 우리가 고려를 하자라고 말씀을 주셨습니다. 거기에 대해서 동의하고 그런 방법들도 앞으로 우리도 같이 노력을 해야 될 것 같고요. 이 직원에 대한 자격 데이터베이스 보유하고 그런 것들에 대해서 감독층에 보고하도록 하는 시스템, 이런 것들에 있어서는 좀 내부 통제 기준 안에 잘 넣어서 저희도 좀 이루어질 수 있으면 좋겠다는 그런 생각을 해봤습니다. 네 번째는 이제 저는 금융소비자보호법이 지금 현재 시행되면서 모든 금융인들 접점에 있는 분들과 금융소비자들이 15분 걸려서 해결할 될 일을 1시간씩 하고 있으니까 너무 힘이 든다라고 하십니다. 그래서 사실 제가 직접 가서 통장도 개설해보고 카드도 발급해봤는데요. 전문가적인 식견을 가지고 있는 저로서도 상당히 그 현장에서 어려움이 있었습니다. 그래서 이런 것들이 고통으로만 남지 않고 성장통이 되기 위해서는 이 언론들도 조금 너무 불편하다 이런 이야기만 많이 하지 마시고, 사실 학계나 업계에서 이런 객관적으로 저희가 세미나 하는 것도 잘 보도하고 해서 어떤 점들은 좀 금융사들이 해나가고, 또 금융소비자는 금소법이 통과됐지만 책무 의무로서의 어떤 책임감 이런 것들도 굉장히 중요하고 참아낼 수 있어야 하고, 또 정부 당국도 여러 가지 해외 사례들을 가지고 또 많은 학계와 이런 저희 같은 단체들과 협력해서 이러한 것들을 잘 해나갈 수 있지 않을까라고 생각합니다. 네, 고맙습니다.
Yeah, thank you, Ms. Jung. And last, we have Dr. Yeonggeun. And let's see. Okay, so the Miss Ho is attorney by profession, and she also has a PhD from University of Virginia Law School, and she has been a very active member of our association. So with that, I will turn it over to Miss Ho.
Hello, everybody. My name is Kyung. 안녕하세요, 허유경입니다. So I'm a director at Consumers Korea, a consumer advocacy group in South Korea. The Korean name is 소비자 시민 모임입니다. And I'm also a council member of Consumers International, which is an international advocacy group for consumer protection. First of all, I'd like to thank Professor Cho and the KDI staff for organizing this seminar. Sorry, so I'll just share my slides. Okay, sorry. And I would like to also thank the speakers and the previous discussants for providing insightful opinions on the implementation of financial consumer protection. So the topic of my panel discussion will be about the financial consumer protection policies and its implementation in the international fora. So prior to the crisis, as we all know, the domestic regulators, as well as the international organizations, also known as the international standard setters, had generally had a very limited role in financial consumer protection as a regulatory goal. So this was mainly due to the original mandates of the organizations, and as well as their members, and also the mostly domestic nature of financial consumer protection, especially in areas such as consumer finance. So as we all know, the global financial crisis in 2008 sparked by the subprime mortgage crisis in the United States, has changed our views on the importance of FCP and its interrelation with financial stability and prudential regulation. So the main actors prior to the crisis was mainly the BCBS, IOSCO, and IAIS. The BCBS, which is the most influential international standard setter, noted for its provision of Basel capital requirements, established the core principles for effective banking supervision, first in 1997 and revised after that. But prior to the crisis, the core principles had very little to say on consumer protection matters. In 2012, after the crisis, the core principles recognized that some consumer protection elements are a precondition for effective banking supervisions, but it doesn't really give much detail or any detailed requirements and so forth. So this is mainly because the primary goal of BCBS is not FCP. It is basically a group of, its membership is for central bankers, which many of them do not have consumer protection mandates. Both the IOSCO and the IAIS have, which are standard setters in the fields of security regulations and insurance regulation, make it clear that consumer supervisors in these fields have a role in consumer protection or investor protection. So the IOSCO objectives and principles, first established in 2004 and revised in 2017, sets out principles on securities regulations, and the objectives, one of the main objectives of these principles is protect investors. The IAIS, which stipulated the insurance core principles and methodologies, also stipulates, among other matters, insurer and intermediary conduct in the sales of insurance products. So the reason why there was limited attention to FCP prior to the crisis is due to the nature of consumer protection. First of all, because retail finance markets are traditionally regulated locally, and there is very limited cross-border transactions as we see in wholesale markets. So fundamentally, there is little motivation for the regulators or the states to cooperate and coordinate in this FCP policies in retail markets. And then there are also limitations due to the soft law nature of international finance regulations. So unlike agreements which are formally signed by the states in areas such as trade, international finance regulation is primarily governed by soft law, which is primarily negotiated and signed by the financial regulators. And so there is little retaliation or limited enforcement in these areas of non-compliance. The open nature and the high level of generalization of these principles, they lack the details, they lack the implementation deadlines, especially in FCP standards. And these characteristics also contribute to the soft characteristics of FCP in the International Financial Regulation Forum. So as we all know, after the global financial of 2008, in a nutshell, we see many more participants in this area with many initiatives for financial consumer protection. So shortly after the crisis, when the head of the G20 states and Financial Stability Board gathered to discuss the results of the crisis, they recognized that the importance of financial consumer protection, and they mandated the OECD, the G20, and other relevant international organizations to get together and stipulate high-level principles on FCP. So the result of that was the OECD G20 high-level principles on financial protection, stipulated in 2011, and which is being under review currently this year and next year. So I would like to note that Consumers International, of which I am a council member, was invited to give the consumer's perspective on these high-level principles. So these high-level principles are meant to be non-binding and applicable across all financial sectors. They do not supersede the existing sector-based principles that were stipulated by the sector-based standard setters. So as you see, the principles deal on many topics that were discussed in the seminar, most importantly, disclosure and transparency. But the language of the principles are very, as the name suggests, it is very high level. It doesn't really go into the depth of like how these principles are implemented in each country, which this conference discussed. Subsequently, the G20 OECD task force on financial consumer protection was formed, and it has studied all these topics of implementation of the topics that were dealt in the high-level principles. And the task force also discusses issues such as more current issues such as digital finance, aging population, some aspects of behavioral economics, COVID-19, and so forth. So we also have the World Bank, which itself is not a specialist in financial regulation, but nevertheless, after the crisis, recognized that financial consumer protection contributes to economic growth. So the World Bank has published a series of documents called Good Practices for Financial Consumer Protection. It documents the implementation or practices around the world globally of the topics that were included in the high-level principles. So it's a very vast document. The 2017 version is very comprehensive. And then we also have the UNCTAD, which also stipulated the UN guidelines on consumer protection, which in 2015 included new sections concerning financial services. And there are other organizations, FinConet, which the International Financial Consumer Protection Organization, which has membership of consumer authorities that have mandates of financial consumer protection. And we have INFI, which was also established after the crisis, which focuses on financial education aspects, and CGAP, which actually was created prior to the crisis, but after the crisis is working on financial inclusion issues for poor country, but also has recently done some work in financial consumer protection. So just to sum up, we see that there's a hugely increased profile of financial consumer protection in the international fora, and many of these organizations are not, their primary missions are not FCP. However, so we see all these varieties of organizations, but we also see limitations of these from post-crisis policy work. So they're not worded as requirements or mandates, but more they're like worded as high-level principles or good practices and not best practices. Also surveys, toolkits, approaches are some of the languages that are used to describe these post-crisis policy work. The work is also less intrusive and also works in technical areas, which was and like disclosure and transparency and financial education, which was discussed in this conference. And the principles, the post-crisis work also works on more technical issues like subtech, digital finance, and some aspects of behavioral economics. The post-crisis work is intended to promote global learning and knowledge sharing rather than setting a hard set of rules. So I think this is because due to the primarily domestic and local nature of retail markets, and often the politicized nature of consumer protection makes it difficult for these international organizations to meet and make it difficult to find global agreements or rigid principles in this area. And also learning from Professor Schmulow's comments, prescriptive rules don't work very well in this FCP area. So this may also explain the vagueness of the work in this area. However, I would like to finally comment that global learning and collaboration, such as one that we're doing right now, are potentially very powerful tools to produce substantive and informative policy work for FCP. So I would like to thank the IFP co-organizers for, again, making this conference. Thank you for listening.
Okay, thank you. Thank you for the another interesting talk. So that wraps up all 7 panel discussions we planned. And it's exactly 12:30, so it's the planned time, but I think we can spend 10 minutes or so more. If you have to leave, please feel free to do so. But now, I just want to make sure that we go back to the first presenter, Professor Ko, for her for his comments and reactions. The second presenter, Professor Choi, could not join us through Zoom today. But before we do that, I think we can have some comments, questions, critiques from the floor. So anyone from the floor, if you want to talk, but if you do not have talk permission, then let us know. I think what you see in the screen, those people in the screen can talk freely. Sharon, how are you?
Hello.
Yeah. So our
I think I am unmuted. I didn't know how to raise my hand officially, so I thought I would.
Yeah, we have Bob from Canada as well.
Unofficially. Thank you for organizing and moderating this event. It's been very informative and very well done. Despite the late hour here, I have really enjoyed listening. It's very interesting to me and very encouraging to see, and echoing what Andy Schmulow said, the convergence across different natures of core principles associated with financial consumer protection. It's also heartening to see that this is not by accident, right? There is specific attention across countries to learning from best practices and using research to improve financial consumer protection. I'd also like to echo just a couple of other things that I've heard. One is the idea that emphasizing the consumer in the financial consumer, less so than the financial component. We can also learn a lot from looking at consumer protection in other realms. This idea from Germany, and that was apparently used as well in Australia, of simple risk metrics, simple risk scorings, right? This type of simplicity and disclosure is something that's emphasized in other realms, less so in consumer finance. But when we can take advantage of the insights we've learned from consumer protection in other areas, I think we can probably make consumer financial protection more effective as well. And echoing what Ms. Jung said, we want to make sure as well that products are not too complicated, right? This is important for consumer protection as well. We didn't get into these questions except in the original presentation, and so I hesitate to bring them up since we're limited for time. But I would be really curious to know more about the remedies for damages and the role of the FSC in Korea with regard to cancellation of products that are deemed to be defective. This is probably something that will develop over time, so maybe there's not a lot of information to be had about that, but these seem important to me as well. But thank you again for all of the information that's been shared today.
And I also want to thank you for the new issue of the IRFC, which was very interesting. Okay, so Bob, do you want to share any thought? I think you have to unmute.
I like the emphasis on international cooperation. It's obviously a way to get progress made a lot faster. And so this forum is highly useful in that regard. I did think that I was responding a little more warmly to the suggestions people were making about incentives and behavioral matters to try to prevent, well, let's say it this way around, to try to make the rewards go to the firms that have the best services and the best offerings, not to try to fix things after they're all broken. And so I think that, and the emphasis on looking at success of, let's say, the success of the market and that sort of thing. And there have been some suggestions made by the Consumers Association and others here. So I like that. There are some simple things like requiring plain language documentation. I'm pretty sure in the Korean language, they will have the same language standards and methods of testing. And I just took a look at Florida's legislation, which is huge wording, covers you with too many words. But in talking about words, they do try to say that the documents used in Florida have to be readable by grade 11 level of students. And therefore, I'm hypothesizing that there are actually financial institutions who will make the documents available at that level in Florida, but not elsewhere. So, but my main point is that making things easier is a really profitable way to go for consumers, rather than to try to increase the capability of consumers to understand more and more complex documents. Thank you.
Okay, thank you, Bob. Now, before we go to Professor Ko, any other comments from the floor? Okay, if not, it has been a long morning. So let's go back to Professor Ko for his final remarks.
Thank you very much. I think that the various comments from other countries, including Koreans commentators, are very useful and insightful, so that I think that your suggestions maybe greatly contribute to the development of Korean Financial Protection Act implementation. And I think that the level of the implementation of the Korean Financial Protection Act is very similar to the level of the other countries, or particularly the advanced countries' financial consumer protection system. However, as you may know, that we need more development to improve our financial consumer protection implementation. So that in terms of that, I think that some suggestions, for example, the experimental or behavioral research studies, or the employee database management by the BaFin will be another factor for our Korean regulator to pursue, or for further studies in terms of the implementation. So second one, I think that we need particularly Korean financial regulators should be more flexible in implementing the Financial Consumer Protection Act. For example, as I raised the issues in my presentation, so that whether the loan contract, financial product should be subject to the new rule of the suitability rule and appropriate rule. So that I think that in case of the loan contract, already the financial institutions made a credit review for the contracting of the loan product. So that in terms of that, I don't think that the suitability rule or appropriate rule does not apply to the loan contract. So that this is a good example for a financial regulator to implement the Financial Protection Act. And also, the Professor Schmulow mentioned that whether the deposit contract should be subject to the new rule of the suitability and appropriate rule. And so that let me add my comment to the question of the Schmulow, even though Mr. Kim of the FSC responded that I think that the most important reason for excluding deposit contract is that deposit financial product is the kind of a guarantee, I mean guarantee of the principal, so that it's unnecessary for the protecting the financial consumers. So that we need a more balanced approach to the implementing the financial consumer protection, considering the unique characteristic of the financial consumer protection. And the third comment will be the following. As some commenters mentioned, in some countries, there are the different approach to the adopting or implementing the COB regulations, depending on the types of the consumers, such as eligible consumers or professional consumers or retail consumers, so that we need a more balanced approach, whether you have the same principle to all the consumers, so that as I raised the issues in my presentations, expression duty, I think should apply to the sophisticated consumers, because they still need get the information. Therefore, so we need to consider the unique characteristic of each type of financial product, and as well as the type of the consumers. And finally, as to the issue raised by the Professor Sharon Tennyson about the role of FSC in terms of the cancellation of unlawful contract. As you raised the good issues, I think that this new regulation will be a hot, very keen controversy now in my country when this new regulation will be implemented, because the criteria or standard for the applying cancellation of unlawful contract is very unclear, so that there may be a high possibility of dispute between the financial institutions and the final consumers in terms of whether what criteria triggers for the cancellation of unlawful contracts, so that the financial regulators should be more carefully research about this new regulations implementation. Okay, so finally, as I mentioned earlier, so the various comments in other countries is very helpful for couriers to implement the financial Consumer Protection Act, which is newly implemented, so that you need more study of the cases and more study of the legal aspect or implementation of a regulation. Then finally, the financial consumers protection level will be greatly improved, I think. Thank you very much.
Okay, thank you. Then I appreciate all the participants, as well as to appreciate those KDI school staff members who made this June seminar possible before and during the seminar. We will try to post this in the YouTube or any other means so that you can access our discussion. Then as a departing thought, it was very interesting and to some degree surprising to see the level of behavioral research inside the regulatory organizations. So I think that's a very good direction to have more data and evidence-based policy making. So I think, you know, as a academic association, EAFICO should continue to promote that kind of direction. If you think we have more things to discuss on this topic, we have season 2. In fact, we have annual conference in August, the August 6th and 7th. So I will get back to you all with more details as well as planning on that event. So with that, I want to close the seminar today. Once again, thank you very much for your participation. Bye.